I was just wondering, like, how do you view like some narratives like real world assets? I think personally, I expect it to be quite big during the next cycle and to be quite big, like in the DeFi ecosystem. Do you think that in a way it's true DeFi because at the end of the day you have central point of failure? And how do you see it like play out in the next cycle? Do you see it as something big, as maybe Larry Finks mentioned it, or like is it something that is very hype and not very adapted anywhere?
So when I think of real world assets, correct me if I'm wrong because I'm not super in the weeds on this. I'm thinking of U.S. Treasuries yield 5%. Most people can't own Treasuries. I'm going to create a centralized company that's going to buy some Treasuries and then have a receipt. I'm going to put this receipt on chain, and you're going to trade this token that represents an ownership of a treasury that I have collateralized. That's what real world assets means to you?
I mean, real world assets to me is like everything from the real world that is tokenized. So it could be in a way treasury bills, but it could also be I don't know, watches. It could be apartments. It could be houses. It could be like also physical things, physical items in a way.
Yeah. So I think that real world assets are one of those things that sound great to venture capital funds, but don't actually make any real sense at the end of the day. Because number one is like, what are we trying to do here? We're trying to bring liquidity to things that are in the real world, but on the internet, right? And so do I want to own a singular apartment building? How am I going to create liquidity on that? Or a watch? I'm going to go on a fractional watch. Okay, that's cool. You buy one of these things, you can't get out of it. How do you find liquidity on this fractional watch that you own? So you're basically sticking your money in something, you'll never get it back. So I think real world assets sound great because we have, I don't know, however many hundreds of trillions of dollars of real world stuff. If we just took 2% of that and we put it on crypto and we charged a 1% fee, oh my God, we're going to be rich. And that's the pitch deck, right? But no one's going to trade this shit. People are going to buy it once, like, okay, yeah, real world assets, I can own a piece of apartment. And then they have an issue where they need to get some of their money back. And it's like, okay, well, I need to sell this thing. And someone's like, well, I don't want that piece of apartment. I like this apartment over here. So like, there's no standardization because the assets are different. I now need to trust this centralized entity issuing a real world asset. I mean, there's going to be some real world asset mega scams. Some really good promoters going to get on stage and tell you about how he or she has been able to accumulate all these things. They've got this like super funky legal structure, or that you own a piece of this SPV and the BVI and the Cayman Islands. And then, oh yeah, that sounds real great. And then you put your money in, and then boom, it comes out that they haven't done shit, right? Because you're trusting this opaque legal system in a highly transparent cryptocurrency situation. So I think it sounds great. It's a great thing that people are going to ape into because the total addressable market in theory is very large, but fundamentally it doesn't make any fucking sense. If I want to go buy,
so you're very skeptical.
Go buy an apartment. And I mean, the number one RWA like play is like, I'm going to give some treasuries to people who don't own treasuries. Okay, that makes sense. But why not just go long some swaptions? Because at the end of the day, all it is an interest rate play. If the Fed drops rates to zero, that RWA play on treasuries is worth zero because I'm earning no yield. So I'm just going to go back to AVE and compound. At least I can make 2 or 3% on my ETH, right? So if you want to earn in these plays, instead of paying these guys a multiple on like Fugazi revenue, just buy some fucking leverage trades on TLT. Like, there's no point. Why give these people money? I don't get it.
I think the main issue here, I don't know if you get it in a way, is that first, like houses, apartments are getting very expensive for, I would say, the average consumer, the average retail investor. And so this is a way for them to kind of expose themselves and get some exposure to these kind of investments. And also the thing is that whenever you are like in the crypto industry, like a lot of people in the industry are like all in on the ecosystem. They are degen. They are like fully collateralized in crypto. They only own crypto some of the time. And sometimes maybe when a bear market starts, you want to get some exposure on other kind of products to kind of diversify yourself and not concentrate all your risks on the one type of assets. So I think this is where like real world assets comes in and makes sense in a way. Do you agree with that, or
No, I
makes
think
no
that
sense for you.
What you're describing is an exchange traded fund. We invented this in the 90s, right? You want to own a piece of an apartment building? There's a BlackRock fund. They know how to fucking underwrite a building. You can go buy one. It has an exposure to different buildings across the United States or Europe or Asia or wherever, right? You can go buy one of these ETFs. Why would you go and trust some Muppet who probably hasn't like ever traded anything at default and TradFi to say, okay, I'm going to create these funky legal structures and then I'm going to put it on chain and I'm going to pitch that I'm going to have all this liquidity. But like, why as a market maker would I make a market on a slice of an apartment? So yes, I have an exposure to this apartment, but at the end of the day, when you come to sell it, no one's there to buy it. So what do you have? You have nothing. Yes, you have a pretty number on a screen that says I have so much money, but if you ever need it, you don't have it. So that's the problem with these things is they sound great in theory, but at the end of the day, who's going to provide the liquidity when you want to exit this trade? Because what you have is a very idiosyncratic asset and you have to think about legal structures. If you own property, okay, where is it located? What are the rules? Okay, like, people pitch me like farmland. Okay, yeah, well, I own a piece of farmland. How do I fucking sell that? Who's going to buy it from me? Oh, I'm going to go visit the goddamn farm and like look at the yield on fucking corn? Fuck that shit. No one's ever going to give you liquidity on these things on the way out. And so that's the problem with RWA. But it sounds great because you think about every asset in the world can be tokenized and therefore if I only get a small percentage, my business makes money. And that's a great pitch to a VC and the VCs love it because who can fault that logic?
Yeah, I can see that liquidity is kind of your issue here. I think this is mostly big guy problems because whenever you get big size, like liquidity matters. So whenever you want something to be adopted, you want also like some big guys in town to adopt this thing. And if you have no liquidity, they will never get in a way. So, I just wanted to have your views on the other narratives that are like, on the market and that you kind of like monitor on your side. We mentioned real world assets. That is not something you're interested in. Are you looking at, I don't know, AI stuff, decentralized trading stuff? What are the main topics that comes to your mind? Maybe, I don't know, gaming. What are the main topics that comes to your mind whenever you think about investing for the next cycle? In a digital way, because I would say that most of the time you are exposed to Bitcoin and ETH, but whenever you want to make maybe riskier bets, what are the narratives you're playing with?
Cette vidéo vous est présentée en partenariat avec DYDX. DYDX est la solution décentralisée qui vous permet de trader les principales crypto-monnaies de manière liquide sur mobile et ordinateur. Contrairement à la majorité des exchanges, vous n'avez pas besoin de vous KYC et vous récupérez la majorité des frais que vous payez. Plus de 60 000 personnes utilisent déjà DYDX et j'en fais partie, alors qu'attendez-vous? Scannez le QR code sur votre écran ou utilisez le lien dans la description pour créer votre compte avec un simple wallet et profitez de 5% de réduction sur vos frais. Allez, on repart sur l'interview.
AI is definitely the number one narrative out there. AI is going to change the world. Humans are very good at forecasting things in the short run that are over optimistic, but underappreciating in the long end. So in the long term, I think AI will completely change what it means to be a human. The long term could be 10 years, could be 20 years, could be 30 years, right? But if we're talking about the next 2-year cycle, is the entire global economy or some 40% of it or whatever the number is going to all of a sudden start using AI in a way that makes people actual money, that the company is providing these things? Absolutely not. We're going to forecast this amazing future, discount it back to today, and then pay crazy prices for stuff. And so, yeah, I want to participate in that. So I want to do it in a way where I can sell when I believe that the air is coming out of the narrative and the liquidity is draining. So what does that mean? I don't want to invest in an AI company starting today that's going to go public in 7 years. The market's not going to be there for them. I don't want to invest in a token project that's going to go TGE in 2026. I'm locked up for another 2 years. I don't get my money till 2028. No, I don't want that shit either. I want existing things that are already live that I can purchase on a liquid trading venue that have an AI story, or it could create an AI story, because I might pay a high multiple for their earnings or sales or whatever it is, but I know I can get out of that stock, that token, that whatever, right? So I want things listed today. So if I had to only trade in TradFi, then I'd be going along, Amazon and Nvidia or some other, combination of chip stocks and sort of cloud compute. If I'm in the crypto situation, and I've given a whole essay about this and a pitch on stage, Filecoin, decentralized storage, AIs need storage. I believe that Filecoin could catch that narrative and retake its all-time high in this cycle. on, AIs are going to have to trade and have to fundraise decentralized exchanges. I mean, we all know that decentralized exchanges are great for humans, but even better for AIs who don't want to deal with the analog financial system because it doesn't make sense to them intuitively. So I love DEXs, and I want to participate in the top DEXs, whether that's on a spot trading basis or on a derivatives basis. So those are the types of things I'm looking for. But again, I want things that are liquid today. The early stage stuff that we're doing in Maelstrom, we're focused more on infrastructure things that are related around staking. That's probably the most number of projects we've done around ETH staking and restaking, because that's going to be something that's going to be here in 2030, 2035, when we're able to actually sell into this stuff. But if I'm thinking about my liquid trading portfolio, degen portfolio, okay, fine. I'm not going to get in on the pre-sale deal. I'll buy it once it's up 5,000%. I don't care. But if it can go up another 100x from there, great. Do I think it's going to last to 2030? Probably not. So I'm going into it knowing that I'm investing in a piece of shit. But I believe, and maybe this is my hubris speaking, that if I can have a very concrete view on the cycle and liquidity, that sort of I can hopefully time the time when the narrative shifts and say, okay, well, people are starting to question, am I overpaying for AI? Are the results living up to what I thought the hype would be a year, 2 years from now? When people start asking themselves those questions, then I know it's time to start exiting the market, because then the VCs start asking, so, where's your revenue? Like, what's your path to revenue? Like, VCs don't ask those questions in the bull market. They just say, yeah, spend my money, get users. I don't care if you make money. And then, 2022 comes around where the Fed raises rates from 0 to 5%. It's like, show me a path to profitability, please. And it says, well, what the fuck? I thought that I could just show up with a PowerPoint and get $10 million in a Series A. Like, nah, son, that was a 0% world. This is a 5% world now. Show me that fucking money, right? So when we start to get to that situation, then I hopefully have exited by that point.